This is Tom Aspray with the Viper Report. In today's video, I want to take a look at the relationship between growth and value stocks and why knowing which group is leading can be a very important consideration in picking stocks and ETFs. This longer-term chart shows you going back to 1999. The rally into 2000 dot-com high here was clearly led by growth stocks. They peaked out along with the NASDAQ in March of 2000. And for the next 7+ years, the value stocks led the way. So this is a ratio of the growth, one measure of growth, IGX, the S&P 500 growth index, versus the S&P value index. So when it's falling, like it is right in here, value stocks are stronger. You can see that the black line here is the ratio, and then the 20-day moving average. And that turned in 2007 as value had topped out and growth was taking over leadership, which has been the case up until 2021. In November of 2021, after we formed this peak, I commented in a contribution to Forbes.com that it looked like value was bottoming and growth was topping out. You can see higher highs here. Down below we had lower highs in the MACD, which was a significant divergence. The current chart shows you that so far in 2023, it's been moving higher, which confirms that growth stocks have been stronger so far in 2023. This weekly chart shows you a relationship as of the close on May 5th, Cinco de Mayo, and you can see the rally from the start of the year here. This move higher, remember, rising, positive for growth, falling is positive for value and negative for growth. You can see the MACDs kicked in here in early February, and the ratio between these two turned higher this last week, as even though the market was hit several days, growth stocks did better than value. Oftentimes, the divergences in the MACD histogram will tell you what's going on. Signaled a rally here back in the summer, last summer, a very sharp rally and growth, and then, of course, a resumption of the decline. Currently, this is positive, shows no signs yet that the rally in growth is over. Another ratio I follow is between IWF, which is the Russell 1000 growth index, to the IWD, which is the Russell 1000 value index. You can see the peak in November here, the decline, and then the low, and turn higher at the start of this year. So it made a new high this last week. That's an encouraging sign. The downtrend line A was broken in February. Now this resistance here has been overcome, suggesting a completed bottom formation here that could take you back to the levels seen in 2021. As part of the Viper ETF service, of course, I do recommend either IWF or IWD. So currently, we've been in IWF since the early part of 2023. You can see it started to turn higher during the early part of the week, and it's close to taking out this new high. MAC did make new highs with the market in March, and the histogram has just turned positive. So this suggests that this rally can continue, but we monitor this on a daily as well as a weekly basis. I hope you found this discussion of growth versus value stocks insightful. As you can see from the history since 2000, it's been important to know which stocks you should be buying and which stocks you should be selling, as it can make a big difference in your portfolio performance. If you'd like to learn more about the growth versus value as well as other very insightful technical tools, you can go to theviperreport.com and look at this special offer for traders and investors. If you click on it, it'll take you to a special offer I'm running. It's just $199. Gives you 90 minutes one-on-one with me. You pay through PayPal, and once you do that, we'll set up a call and discuss how I can help you. And I think if you don't know about technical analysis, and you can see how confused the fundamental analysts are about the current stock market, I think you'll find it's well worthwhile. Thank you very much for tuning in.